Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. I welcome all of you to today's session of JForex Indicators Explained, where we will be considering one derivative of the Bollinger Bands. Bollinger Band I had explained to you, I think, a couple of sessions back, and after that we have been considering each of its derivative indicator. Today is the turn of the Bollinger Band's Fibonacci ratio, and from the name itself, you can pretty much guess that this is going to involve the Fibonacci ratios we will be applying the Fibonacci ratios to the Bollinger bands, precisely the middle band of the Bollinger band, and then we will arrive at three higher bands, three upper bands, and three lower bands. And using this, we will get a good idea of the volatility and also the trend. So we will see how we can take the advantage of this particular indicator provided on the GForex platform to plan for our trades, whether to go long or whether to go short, or if there is not much of a movement, if the underlying instrument is simply moving in a narrow range, then whether to simply sit on the sidelines the way underlying instrument is moving. So all these things can be considered, and accordingly the trade can be taken if we are in a position to identify the sentiments in the market. So for that, our job is to get well acquainted with the indicator, and then we will see its various applications. And for that, all we have to do is go to the JForex platform, where you can find these indicator listed amongst the overlap studies. So there are two ways. You can simply go to the add indicator using F3 or do a quick search. First, I will show you where it is listed. And if we are not really able to find, we can do a quick search. So you will find it amongst the overlap studies and where it is. Okay, so it is second from the top. This is it. All right. And if you don't really want to go through the list and all, you can simply type in the Bollinger band, and here we have it. All right, so this is the default setup, and now we have our chart cluttered with all these lines. We have 7 lines to be precise. One is the middle band, the all important moving average, which we can customize as per our requirement. And using that middle band, the moving average, we have these three upper bands and three lower bands, which are arrived by applying the ATR for that given period with a Fibonacci ratio, and then we add that result of the calculation to the middle band. Then we arrive at these first, second, and third upper band, and first, second, and third lower band. So it's a pretty simple and straightforward calculation. We first have to determine the MA type, the moving average type. We can go with any of the moving averages available on the platform. So this is now done being done using the simple moving average. So here we have this middle band, and that is the simple moving average. Then we consider the 14 hours. Now the chart is being hourly here, so that's why I said 14 hours. So if to be precise, it is going to be 14 candle periods. Suppose if you change the chart to say half an hour or 15 minutes, still then the calculation of the ATR will be based on the 14 hours, sorry, not 14 hours, 14 candle period worth of data. And this is going to be 7 hours of data, as the each candle period has now been reduced to 30 minutes. Now, for simplicity of explanation, I will restore it back to the hourly. Okay. So here is the case. We simply take into consideration this moving average. We are using SMA for this calculation. Then we get the ATR for that given period. We multiply that ATR with a ratio. I will tell you the precise values. We have the first upper and lower band defined by multiplying the ATR of that given period by 1.618, and for upper band we have to add it to the moving average. For lower band we simply have to subtract it from the middle band, and for arriving at the second upper and lower band we multiply the ATR with this ratio of 2.618 to, and then we add and subtract it from the middle band, so we arrive at the second band. And same thing is to be repeated for the third Fibonacci upper and lower band. We multiply the given period's ATR by 4.236, and then we add and subtract to arrive at the upper and lower band respectively. So I hope you got the idea of what we are doing here. So it's kind of straightforward calculation, not much there is to get confused. So kind of easy to understand and easy to apply. All right. So its use is to get us the volatility, the measure of the volatility. We can utilize this middle band as a trend determining factor. If it is on the rise, the middle band is on the rise, then we can consider the sentiment to be bullish. And if the middle band is in decline, then we can pretty much consider the momentum to be bearish. But that's not all. We always have to consider the volatility, the range of the given instrument, and that's how we arrive at the precise entry point, whether we want to go long or short. And it is always advisable to buy at the lowest point of the range and to sell at the highest point of the range. You can never really be sure, but you always have to try to get the range right, and then whether the sentiments are bullish or bearish, you simply want to take advantage of the given range and then place the orders accordingly. So if the momentum is bullish, then you would really like to buy when the underlying instrument is trading close to the lower range and not on the higher range, because then you will know that its range is such that even if you get the momentum right, if the trend is right, still in that given range it might correct somewhat. So it is better to get its range right and try to buy the trade closer to the lower range. So for that, if the momentum is bullish, I would suggest that we can use this first lower band as a good entry point for our bullish trade. And if the momentum is bearish, then the first upper band can be utilized to keep looking for shorting opportunities. And another classical interpretation can also be to use this third highest and third lowest of these Fibonacci ratio bands to look for the overbought and oversold scenarios if the momentum is now looking like fading, if the bullish momentum is fading to some extent, and if the consolidation is happening closer to this upper band 3, then I think we can even start looking for some trades where we can go for scalping kind of opportunities by shorting it closer to this upper band while going with a suitable stop loss. Because sometimes what happens that the underlying instrument keeps rising or rising, or sometimes it keeps falling and falling even after having reached this lower band or upper band for that case. So in those scenarios, we might keep thinking that it might retrace now or in some time, but it doesn't really happen. So here we have the case where it touched the lower band closer to the 1.0367, but it continued to decline almost more than 100 pips. Here we had the decline of close to 120 pips. Even after that, it doesn't really rise much, and then next phase of this decline began again. So we don't really want to get caught in this scenario. So for that, best scenario is you try it once, and if it doesn't really work, then give it up. So that's how it should be. Whether you do it in trading or in personal life, you give it a shot, and if things don't really seem to work, then let it go. So that is also the principle of the market, and we should do better to stick to it. So there is this concept of going with the trend, and for capitalizing on the trend, it is better to go with the flow, but you also apply the range, and for that we are using these Fibonacci ratios. So as I said, we can utilize these three bands, the lower bands as the support range, and the higher bands as the resistance zone. But as I said, we have to keep in mind the trend of this middle band, and depending on that, we can take the trade. So for that, we take this volatility and the trend into consideration. So we will have higher chance, higher probability of getting our trade entry right and making much more money. So now we see how we can get the customization done. As you can observe, this is the hourly chart with the default state of the 50 moving average, and on that we have plotted this Fibonacci ratio upper and lower band. Now, if you want to get a configuration with a higher time frame or lower time frame, all you have to do is go to these editing options. You have all kinds of options provided to you to customize it as per your requirement. So all you have to do is go and experiment it, and only by doing experimentation you will get a good idea of what kind of combination is really like to work for you. So I would suggest that you try these editing options on your own and you will get a good idea. We have these different types of applied prices, and depending on which kind of applied price is used to arrive at these plotting of the Bollinger Band, we will have different combination. Now this is being done using the closing value as the base value, and if I change it to the open price, you can see these Bollinger Bands shifting, and if I make it high, you will see it shifting on the higher side. So please pay attention to these plotting of these Bollinger Bands upper levels and lower levels. Now again, if we change it to the low price, it has now shifted on the lower side. Median price, slight change, typical price, which is arrived at taking into consideration the high, low, and the closing value, which is then divided by 3. If we want to give more weightage to the closing price, then we take the weighted close price, and this is how it will look like in that scenario. Now I will restore it back to the default setup of the close price. The candle period can also be used in various combination. This is the lower time frame combination. If you want to take into consideration the higher time frame data, then you can increase the calculation period of this particular indicator. So here we have these 50 hours of data, as I have now changed the calculation period for these Bollinger Bands to the 50. So we have a lot more smoothing compared to the earlier version. And when this momentum has now gone sideways, we have this almost horizontal plotting for this middle band. And still here in this kind of scenario, we can utilize these upper band and lower bands to keep looking for entries. So that is the utility of this system, where we continue to look for shorting opportunities on the higher levels closer to the resistance zone, and we keep looking for buying opportunities closer to these support areas. And more or less it is going to work, not always, but it will have a higher probability of bringing us good amount of money if we get this customization done right. Now I will again explain to you some other editing options. We can change the candle periods moving average. So suppose if we want to work with a different moving average, then all we have to do is change it to a different moving average. This is now EMA. If I change it to WMA, so it will again change. So this plotting changes as per the type of moving average. If you want to use double exponential moving average, so it has now become a lot more responsive. TMA, it is again showing responsiveness. Trima is a lot more smoother. So here, because of the smoothing of the moving average, we have these bands also looking a lot more smoother in comparison to other moving averages. All right. So we have all these options provided to us on this platform. Let us try it all out one by one. So there is now KAMA. If I use MAMA, as I had explained to you in one of the earlier session, we get the MAMA plotting done in a manner of stairwell kind of structure. So because of that, we have these Bollinger bands also plotted in a similar fashion. T3, T3 is going to be a lot more smoother. So we have this plotting of the T3 based Bollinger bands with smooth curves, and equally smooth these resistance and support areas defined using this Fibonacci ratio. Let us now see what more there is to be done. So this is the MA type, HMA, her moving average. It is a lot more responsive to the immediate price fluctuations. LWMA, it is because it is a bit less responsive. Then we have SMA. So this is how the SMA based Bollinger Bands look like. Alright. So depending on which kind of moving average you use, you will have these different versions of the Bollinger Bands with Fibonacci ratios. Now I will restore it back to the default setup. So let us go back to the simple moving average in this scenario, and let us see what more can be done to make these Bollinger Band ratios work for us and also look aesthetic on these charts. As you can observe, the chart looks quite cluttered, so we can make it a bit more stylish, and for that we have all these options provided to us on the platform. We can choose this color combination if you are not really fan of these three colors used here, the light blue, green, yellow and blue. So if you want, you can make it different. Say let's try out bit of white on the chart. There is too much darkness in the chart, so let's try out white. All right, let's increase its weight. So we know this is the middle band, this is the prominent level, and as it is becoming too prominent, we can then decrease its transparency. We can reduce it to say 50% or up to 90% we can do, but 90% is too much. Let's restore it to the 60%. All right. So the fun point is that we want the chart to work, and at the same time it should be easy on the eyes, good looking, and it will be more fun that way. So that's why we have these various styling options provided to us, and I would suggest that you try these structures out. Now we can increase the width of these two other lines as well. These are the first support and the resistance line, so you can give those two lines more prominence, and here also to reduce its presence you can then decrease its transparency, so the chart won't be looking that much cluttered. All right. Okay, so we have this combination in place. Let us now see what more can be done. So coming back to this levels, we don't really have anything to deal with the levels for these indicators. Advanced option, if you want this value of the Bollinger Band to keep moving for the whole of the candle period, then you don't really have to do anything on this box, this first option. But if you want the calculation to happen on new candle only, then you have to check this box, and it will be calculated only once whenever new candle formation takes place, depending on the prior hours closing value, and then it will remain constant for that given period of time. If you want the calculation period to be highlighted, you have to go to this option, check the box, and you will see that immediately you can identify the basis of the calculation for given indicator. Now I will uncheck this box. Then we can customize the calculation data also. So the instrument can be customized. It can be used from the chart, or it can be kept fixed at Euro USD. The candle period also has the similar kind of option provided to us. We can use it from the chart, or we can keep it fixed, anything from 10 seconds to the whole of month. Side, the ask side and the bid side, we have these two straight sides, and regardless of what is the chart side, we can keep it fixed or we can simply use it from the chart. Then if you want the indicator to be shown on all candle periods, whenever you change the candle time frame, you can keep that plotting done. But if you want the plotting of the Bollinger Bands to be done only on some of the time frames but not on all, then you have to opt out of that box. Oh, I have removed it. Again, I will have to add it. So sorry for my mistake. Alright, so we have it back. Now coming to its editing options. If you don't really want the indicator to be shown on all periods, you simply have to check this box for those particular time frames, and only on those charts, those time frame charts, the plotting will be done. Now if I change it to half an hourly, the Bollinger bands with Fibonacci ratio won't really be plotted. So that's how these system works. And then if I again change it to hourly, we will have the Bollinger band with the Fibonacci ratios back, advanced. So that's how this combination works. And now that I have opted for indicator to be shown on all candle periods, it will be shown whenever I change the candle period to any of the options provided on the chart. The base period can be anything from none to these 4 hours, 1 day, 1 week, and 1 month. So guys, I hope you have been able to understand the functionality and the uses of these interesting indicator. The Fibonacci ratios are being used to arrive at some interesting levels, the support and resistance values, which we then can use in conjunction with the trend of the underlying instrument. We can you look to go for the buy trade closer to the support area in the bullish trend, and we can go for short selling opportunities closer to the resistance zone in the bearish environment. So that's what we can do with this indicator, and much more can be done apart from what I have explained. This is not a exclusive content. You can always make your own interpretation. This is more of an representative content, so I have given you some of my ideas. Now it's your job to go for combinations which you feel are likely to go with a higher probability of ending the trade on a profitable note. So I would suggest that you try out various combination customizations options provided on this fabulous platform, and then you will simply uh, you will surely hit gold and find something which will work best for you. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out these editing options, you have to check out the JForex platform. So all these three links have been provided in the bio. Do check it out. Thank you all for joining in. See you next time around with a new indicator. Till then, have a good time.